Welcome to Bears in Exile. Today is September 19th, and it is time for the market overview. Looking at everything that we look at every night. Starting off with the Dow, ended off with a very well-formed hammer. And we said that we had had 5 green days in a row. We did not have complete crossover and separation of the short-term moving averages prior to entering the bar, which was a warning sign. We had a down move today. It was 108 points, and at its lowest, had it closed there, that definitely would have been a sign that of a bar rejection. And what do we have beyond that? Well, we have an NDE after hours of Italy being downgraded by S&P. Very bad news. Whether or not that's going to induce another Euroland panic remains to be seen, but certainly it is not what we want to have right here as we're getting pushed away from the bar. We did have massive dip buying at the end of the day, bringing it back up rather rapidly, and we did close above the upper price consensus level. Although we were below it at one point, we did close below the at the major price consensus level. We closed above that. We closed below the upper price consensus level. So just kind of hanging out. If we do break and close below the major price consensus level, there will be trouble. And then we have our other NDEs for tomorrow. We have a continuation of the Greek call for their bailout. If that doesn't turn out well, that's going to be horrible. We also have the vote on the Israeli-Palestinian Palestinians wanting to become a nation in the eyes of the UN. That vote is tomorrow. So really a loaded gun tomorrow. So really be careful. CCI ticking down, fast stochastic getting high, getting the cross on the slow stochastic and the 14-day RSI moving average, down tick on the RSI. This looks on the histogram like it is even, but if I were to blow it way up, we had a slight uptick on the histogram and uptick on the MACD. We did say on our last video that we had some problems. How about that? With the divergences in the 60-minute time period. Certainly we got a big dip today, and so can we count that as resolving the divergence? Yeah, I think so. So now we will see how it continues on its own merits. And in the 60-minute time period, it looks like coming down for a bar retest in that time period and bouncing off of it. But a weak inverse hammer at the end of the day. It was not a strong close. Beyond that, 14-day RSI moving average very high. As soon as the stochastics are reach up to meet it, we should have a pullback of some type. So not exactly attractive in the 60-minute time period. SPX is going to be more of the same, very well-defined hammer, still inside of this little either range or bear flag, your pick. Secondary is all identical. Not much to say beyond that, except that we are above the upper price consensus level and the major price consensus level. Notice that we kissed the upper price consensus level today and bounced off of it, which is a good sign. I mean, when you reach those levels, you should have some sort of interaction, and that it does shows that it has merit, which is why we're always looking for it. The VIX, big red candle, but it did end higher than the previous day. We said that sitting on the bar would be just fine, and it would appear that that is what it's doing. Middle Bollinger Band right in the middle. It closed below the lower price consensus level, still a ways to go to the major. CCI ticking up, stochastics both getting low. 14-day RSI moving average still sloping down. Uptick on the RSI, downtick on the histogram and the MACD. So not an attractive chart, but the bar is holding it. And once again, another reason why we look at the bar, why we pay attention to it, and it's working. Going on to TNA. Spinning top. Stinking TNA. Can be counted on for stinking spinning top. And essentially going into a flat line of the short-term moving averages. Ugh, not attractive. At least it's above the major price consensus level. It is below the upper price consensus level, just hanging on out. Downtick on the CCI, downtick on the fast stochastic, up on the slow stochastic, up on the 14-day RSI moving average, downtick on the RSI, slight downtick on the MACD histogram, and slight uptick on the MACD. And it did, pop down a little bit. We're talking about those divergences in the 60-minute time period, and so this has had a good dip. You can notice that instead of a clean bounce off like with the Dow in the 60-minute time period, it has penetrated the bullish bar more. It's damaging it, collapsing it, and yeah, it's sitting on top of it at the end of the day, but it hasn't exited it completely, not the short-term moving averages. So it's not a good sign. It's not the end of the world, but it's not a good sign. And going on to UUP, star of the show. Yep, bounced above the 200-day moving average. We had this little doji star on the previous video, and we were thinking that we would go up for a test of the bar, and then it would either be a failure or a breakthrough. And as usual, instead of fighting with resistance, it just jumped over it, which is cheating, which I don't particularly enjoy. And but it did what it did. It jumped above it, went down, kissed it, went back up. I mean, it was that it touched it is a good, healthy sign, but it would have been much better if it had beat it naturally. But it is what it is. Histogram is sloping down, so to have this up move on a downtick day, not exactly a great sign. It was red, but 14-day RSI moving average very high, stochastics fast ticking up, slow ticking down, CCI high, MACD itself high. It's not a very attractive chart. We didn't make that downtick move completely. We came close, but not quite. But it could be assumed that if we continue to have bad news, that this is going to go up. And now that it has cleared the 200-day moving average, perhaps it is going to continue on its merry way. So, do have some cross in the middle Bollinger Band into the short-term moving averages, but it has so far to go before it could have a complete cross be on top of it and drag it down. Of course, we're having the bullish cross on the long-term moving averages, forming a bullish bar. All it needs now is more separation. The only thing really bearish about this is the secondaries, which are very high, seem to be setting up for a move down, but if they get stuck up there, then away it goes. FXE, nice inverse. It is a fat spinning top. Short-term moving average is pointed down. We noted on the last spinning top on our last video that the moving averages were pointing down once again. Not a good sign. CCI ticking down, side tick on the fast stochastic, up tick on the slow stochastic, down tick on the 14-day RSI moving average, down tick on the RSI, up tick on the histogram, down tick on the MACD. What an ugly mess. So, with that in mind, I will defer to the short-term moving averages, which are all pointing down and being below the 200-day moving average until something changes. But very mixed bag. And gold, our second VIX. Oh, big red bar. We said that we've been saying that we were expecting to move back down to the major price consensus level, and it sure seems that we're getting that. It came really close today. It did not kiss it, it did not pierce it, but it came close. We have a bearish engulfing of the previous candle. Short-term moving averages pointing down, but we do not have a whole bunch of separation or anything. So at least it has that. All of our secondaries, as we've been noting for quite a while now, all pointing down. So not unexpected, but still unfortunate. I mean, it's gold. And SLV have a hammer. Short-term moving averages entering the bar. We should be seeing some significant damage over the next couple of days if they stay inside of the bar. It did kiss and pierce the major price consensus level today. All of our secondaries clicking down with the exception of the RSI, which got a side tick, and the fast stochastic, which got a side tick. But from the way that it looks now, it would appear that it would stay inside of the bar, collapse it, and unfortunately turn into a double flatline, which we do not enjoy. And unless some NDE comes along and just pumps it right up, but it certainly looks what it appears to be doing right now. So as stated near the beginning of the video, this is an NDE intensive week. Intensive. So be extremely cautious, and there's no doubt going to be a lot of chop, a lot of swings up and down. It's just going to be ugly. We have lots of things that it would appear to be negative on first glance. We have the FOMC 2-dayer this week, and I don't believe that we'll get QE3, but who knows how that's going to be perceived. I still think it's either going to be positive going in and negative going out, or negative going in and positive on the way out. That's how I see it. But certainly if everything else is just too bad, then it'll just be negative all week. I don't see a lot of silver lining this week, and certainly the charts at this moment don't appear too friendly. But what can I say beyond that? Short-term moving averages, Dow, SPX, two most important things, not looking that great for piercing the bar, getting through it, busting it up, and that's how it appears at the moment. So as always, all investing decisions are your own. This chart and video are for entertainment, educational, and consumption of time purposes only. Good luck, and thank you.